Stepping into the world of trading can feel like trying to read a map in a totally foreign language. It's confusing, right? But what if you had a clear, easy to follow roadmap? Well, that's exactly what we're going to give you today. We're going to guide you from your very first practice trade all the way to going live. So, you ready to start the journey? Let's dive in. So, paper trading, where you practice with fake money, it sounds like the absolute perfect training ground. You get to learn the ropes, you don't risk a dime. What could go wrong? Well, there's a catch, a big one. The problem is, a lot of these simulators are just too nice. They don't prepare you for the realities of a live market. So, how do you practice the right way? Let's find out. Here's the game plan for today. First, we'll talk about how to practice without any risk. Then, we'll get into choosing the right tools for the job. After that, we got to cover how to keep score, the basics of profit. Then we'll dive into two really powerful analysis techniques, support and resistance and moving averages. And to wrap it all up, we'll give you a solid plan to go from practice to performance. Sound good? Let's get started. Okay, first things first, before you even think about putting real money on the line, you have to build your skills. And that means you need to practice in an environment where mistakes are just learning opportunities, not, expensive financial headaches. And this is where paper trading comes in. Honestly, the best way to think about it is like a flight simulator, but for traders. You're using virtual money, but you're making trades based on what's happening in the real market. It is a fantastic way to get comfortable with the mechanics, placing orders, making decisions, all without those real-world consequences. Now you're going to hear a few different terms for this, and they're not all the same. Paper trading is usually the most basic version. Standalone simulators, they're great for just getting your feet wet. But if you're really serious about this, what you want to look for is a demo account. And why is that? Because they do the best job of mimicking a real broker's platform, which forces you to practice the two things that matter most, risk management and position sizing. So how can you tell if a simulator is actually going to prepare you for the real deal? Well, you look for these 7 realism factors. For example, does it model slippage? Slippage is that tiny gap between the price you click and the price you actually get. A simulator that gives you a perfect fill every single time isn't just unrealistic, it's dangerous. It's teaching you bad habits that will absolutely cost you real money later. Same thing goes for fees and spreads. They might seem small, but in the real world, they can easily be the difference between a profit and a loss. So, which one should you actually choose? Honestly, it really depends on your style. If you're a visual person and you just love charts, TradingView is a fantastic place to start. Super easy. Planning to trade options? Then a platform like thinkorswim is built exactly for that. And if your number one goal is to build rock-solid risk discipline from day one, then a risk-first demo like TradeLocker is designed to do just that. Okay, so you've practiced, you've started building some good habits. Now it's trying to choose the platform you'll use for real trading. And believe me, this is a critical decision. Here's a pretty simple checklist to help you make that call. First off, is the interface easy to use? You're going to be staring at it a lot. Does it have the stuff you actually want to trade? And this one's huge. Are the fees and commissions totally crystal clear? Finally, don't sleep on security and customer support. You might not think you need them until you really need them. All right, let's talk about the whole reason we're here. Profit. Sounds simple enough, right? But you'd be amazed how many new traders get this wrong. And look, if you can't accurately measure your performance, you have absolutely no chance of improving it. The formula itself is dead simple, but step 3, fees, that's the one that trips everyone up. Your real profit isn't just what you sold it for minus what you bought it for. You have to subtract all the trading fees and commissions. Trust me, those little costs add up fast, and they can easily turn what looks like a winner into a loser. All right, let's get into our first big technical tool. I want you to think of support and resistance like the guardrails of the market. They're these key price levels that can give you a pretty good clue about where the market might be headed next. Resistance is a price level that's above the current price, and it acts like a ceiling. It's basically a point where sellers tend to show up in big numbers, making it really tough for the price to break through and keep going higher. So, how do you find this invisible ceiling? You just look at the chart's history. See those places where the price shot up but then just seemed to hit a wall and turn back around? Boom! Those are your potential resistance zones. Some traders call them sticky points, which is a great way to think about them. Now, the flip side of resistance is support. Simple enough. If resistance is the ceiling, support is the floor. It's a price level below the current price where buyers tend to jump in and prop up the price, stopping it from falling any further. And just like with resistance, you find support by looking at the past. You're searching for those spots where the price was dropping, but then all of a sudden it bounced back up. Those are the historical price floors that you definitely want to have on your radar. Actually, drawing these levels is way easier than it sounds. Just pull up a chart with a few months of data, find at least 3 points where the price clearly bounced off the same level, and then just connect them with a line. It's a super simple way to see how the market has behaved in the past, and that can give us some really powerful clues about what it might do next. Okay, let's move on to our next tool, which actually builds on what we just learned. While support and resistance help us find key price levels, moving averages help us understand the direction and the momentum of the overall trend. A moving average is pretty much what it sounds like. It's a line on the chart that shows you the average price over a specific period. Shorter periods, like a 20-day, give you a feel for the short-term trend. Longer ones, like the 200-day, show you the big picture. Generally speaking, bulls like to see the price above that 200-day line, while bears start to get interested when it's below. Now, things get really interesting when these moving averages cross each other. A golden cross is when the shorter-term average, in this case the 50-day, crosses above the longer-term 200-day. That's a classic bullish signal. The opposite is called a death cross, and as you can probably guess, that's a pretty powerful bearish signal that gets everyone's attention. We have covered a lot of ground: practice platforms, calculating profit, some core analysis tools. Now, let's bring it all together. How do you safely make that leap from practice to performance? Okay, listen up, because this is important. The biggest challenge in going from paper to live trading, it isn't what you think. It's not technical, it's emotional. This 14-day plan is specifically designed to help you bridge that gap. For the first few days, just focus on mastering the platform, make it second nature. Then, for the next week, pick one strategy and execute it over and over again, at least 30 times. Finally, in those last few days, start treating it like it's real. Give yourself a daily loss limit, for instance. This is how you build discipline before your real money is on the line. And there you have it. That is your roadmap to getting started in trading. We've covered everything from the basics of practice to the core tools of analysis, and we've given you a plan to go live. You've got the map, so the only question left is, are you ready to take that first step? Good luck on your journey.